Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's webinar about the legal office expense management has been approved for 1 hour of CPD credits by the Law Society of Ontario. And so just reminding you that you are able to take today's webinar as part of your CPD credits for your professionalism credits, okay? And you have to search for the subject area of law office expense management within the portal that you use. And it's for 1 hour of CPD credits. And one of the common questions that we do get asked is, do we record this webinar? And the answer is yes. This would be recorded and would be made available to you as early as Tuesday, Wednesday next week. And you can always access it from our YouTube channel as well. Okay. And once again, for housekeeping, do request that you mute your phone lines. Kindly do use the chat window. And again, we'll look forward this to be a very interactive session as we walk you through the different aspects of legal office or law office expense management, as well as we'll look at how you manage both client and business expenses. Okay. Alrighty. So like any other uLaw webinar, today's webinar has an agenda. And for those who have actually attended this webinar before, we're trying to keep it, from a demonstration perspective as different as it can be every time. But the slides obviously remain to be the same. For someone who's joining us new, we welcome you, and we hope this would be an informational session to you as well. So if you really look at our agenda, the key component of what we want to cover in this particular subject area or webinar are key differences between the two types of expenses that you should expect to incur as a legal professional. Okay, so there's one which is the disbursement, which is the expenses on behalf of your clients. Okay, and obviously there are the office expenses that you incur as a business owner, right? So you have a law firm, you have clients, you obviously have expenses on behalf of your clients, such as a court fee or an application fee that you charge, or maybe as part of the flat fees that you have, whatever that may be. You have disbursements or expenses on client accounts, and then there are obviously the business or office expenses that you incur, such as your, law society fees. It could be credit card, it could be stationery, it could be the laptop, printer that you purchased for your office. And those are obviously the business and office expenses. So we'll look at how they differ and the types of reports and documents that outline these two different types of expenses. Okay, and we'll look at them individualistically as well in terms of the characteristics of disbursements, the characteristics of office expenses. So if you look at disbursements, one of the key questions that we've constantly been asked, and this was a reflection of being able to answer it in a much larger audience, is what are these disbursements? What are its key characteristics? And more importantly, how do we manage them? Okay, what are some of the best practices that we can keep in mind as we look at managing disbursements? Okay, so one such suggested best practice, again, based on your style of practice, is why not manage all of your client expenses or disbursements right out of your trust account? What are the benefits of doing that? Okay, or the flip side is, let's say you don't even have a trust account to begin with, then obviously you paid out of your general account, but what are the best practices around that? What are things that you have to keep in mind as you exercise dispersing out of your general account? The different types of expenses and the methods that you may use, the markups, the markdowns, etc. Okay? So we'll look at the different types of general disbursements as I mentioned. We'll take some examples of billable, unit rate expenses, maybe outsourced work or consultancy, which is a common expense that we come across these days, right? As more entrepreneurs join the legal industry, you're seeing how they are able to collaborate and work as third-party or outsourced consultants for other firms. So we'll look at one of those examples as well. And then we'll jump into what our business, or before that, what are the expectations of the Law Society? I think I briefly touched upon that. So all the documents that are required to be generated that outline all those expenses that you've had on behalf of your clients, okay? The ledgers and journals. And then we'll look at the business office expenses. How can you manage your business office expense? Some of the discipline that you can bring into the game, into your business, that allows you to be, ahead of your game, that allows you to track your expenses faster. It allows you to also measure any HST paid that you can then use against recoverable of your HST, I'm assuming that you have an HST account, right? And we'll look at the different types of business office expenses. And as I said, this could be unique based on different silos. But some of the common expenses: rent, taxes, even interest and bank charges. So if you're being charged interest on a specific charge on that account, then you can use that as as some of the bank charges. Even salaries are some of the expenses that you would incur as a business. Law Society membership fees, any specific Law Society memberships that you may otherwise have as well. Okay. And last but not the least, we look at the expense book that kind of really outlines your business expenses. It outlines all the expenses from a disbursement as well. And we'll look at how you could use the analytics capabilities to really get the data or the information out of the data that's being stored within your legal accounting product. And for purposes of demonstrating the capabilities and nuances of these different types of expenses, we're just going to be using uLaw as one such legal accounting product as an example. Any legal accounting product should necessarily give you that same comfort. Okay. All right. So let's start with the disbursement. Okay. What is that disbursement? We'll look at the definition. In simple layman terms, or before that, the disbursement is the act of paying out or dispersing money, such as money paid out to run a business, expenditures, specifically that a legal professional may have to do on another person's behalf in a connection with the transaction. Okay, so let's assume it's a matter. That's the transaction for a specific person, which is your client, and you're basically paying out an expenditure that you're incurring on his behalf or her behalf or an individual entity's behalf, company's behalf, as part of that transaction. That's how you would define that disbursement. But layman's terms, these are expenses that are incurred on behalf of your client by your legal office. Okay? But if I were to turn the plate and look at it from an accounting perspective, what does that mean to your legal firm is that you are required to record the disbursement as an expense in your books so that you can balance the accounts, whether you've done that through trust or through a general disbursement, in which case you would have to raise an invoice to recover that expense. Okay? So the disbursement, again, I'll stick to the layman's term, which are the expenses incurred by the legal office on behalf of your clients. A business expense, again, we'll stick to the layman's term. These are expenses obviously incurred by your legal office to keep the lights on in your legal office. So these are not on behalf of your clients, expenses that are necessary to run your office. These are office expenses that you incur as part of running that legal business. Okay? But the most important thing from an accounting perspective is that you are still required to record this information so that they balance, so that you're able to manage your taxes as well. One of the most significant differences, and we've spoken about this in our previous webinars, it's very important that you understand that. One of the key differences is that the expectation in a very positive scenario or ideal scenario or disbursements is a recoverable expense, okay, which is when you actually incur that expense, let's say on an application fee that you pay ahead of time on behalf of your client during that matter, the hope is that you are able to recover that expense by raising the invoice or by using your trust account. Okay? And the reason, and obviously with business expense, these are not recoverable. These are your own office expenses, right? And the fact that you are able to recover these expenses, especially the disbursements, are one of the significant reasons why that you need to track them. Okay, so let's say you made that application fee and you wrote them a check. Very important to track each and every component of that transaction. What was the amount, right? Was there a tax involved? What was the date of the transaction? How did you pay for it? Who was it paid for? All of these information combined allow you to define that disbursement very well. And by tracking it and by measuring it, you are able to obviously associate it to the appropriate client so that you can recover that expense through an invoice, as I said, or through directly from a trust for that specific client. So it's very important that you keep tab of the disbursements for that client. Okay, so now that we know that it's really important to manage these disbursements, the question is, what are some of the key steps that you could keep in mind, as you transact and manage these disbursements, okay? So the fundamental question is it best to use trust disbursements or disperse out of my trust account, which is basically have a retainer, have the cushion within the retainer to accommodate payments or disbursement out of that, or is it better suited to do it out of general? Okay. And a quick answer that we provide is it really comes down to your style. It really comes down to your personality. It comes down to do you need, do you have the acumen and the discipline to manage some extra paperwork that's required as part of the process, right? And regardless of whether you pay it out of trust or general, and we'll get to that in our kind of subsequent slides, some of the common characteristics, as I mentioned, that needs to be recorded are as follows, right? When was that disbursement paid? So let's say that court fee, what is the date? How was it paid? So did you pay it out of a check, right? Or was it a credit card? Was there a business credit card? Was there a personal credit card? Did you, so those are some of the questions. Or if this is, let's say, a fax or a photocopy, then, did you pay out of your office expense, as part of the fax in your office? Or did you go out there and use, let's say, a Walmart or Staples or Office Depot and use cash, which is then your own money, to pay that expense or disbursement, sorry. And it will be important to capture the client, very important, right? So it's easy to track. And also, reason for the expense. Because like the way we're talking about court fee, application fee, photocopies, fax, mileage. So these are some of the reasons why that expense was incurred to begin with. Recording the client's name, and even better, ensuring that you also capture the matter for which that disbursement is related to. And I know as cliche and as obvious as it sounds, obviously we've heard of a lot of clients that we've worked with before they moved in using uLaw, where they've, a lot of folks that use manual paperwork. Many times it's just quick capture of the expense itself, dollar amount, maybe an Excel sheet, maybe Post-it notes, and sometimes some of the key information that's required specifically with regards to which matter it was may sometimes be lost in translation, right? With all the paperwork that happens, if you don't have a mechanism of tracking this in a proper way, and sometimes you may lose that information, and then you're reconciling or backtracking many a times. So make this as part of your process. Regardless of whether you use a legal accounting software or not, obviously software loves to give you that flexibility, gives you that extra time because you can, the software can obviously do this work for you. But even if you were to do this manually, please keep these steps in mind, pieces of information that's required, because all this information invariably lands in a ledger or a journal that is then required for you to present as a document. Okay? Now, if you were to pay this out of a general account, some of the nuances there, decide what portion to invoice and which one to send to the invoice to the client. Okay? For example, if you've got a dinner expense and you've got a disallowed expense, which is a tip, decide whether you want to charge the client that tip or not, or if that's on your behalf. If that's your style, then make sure that you're not charging him for it, right? A great step, or I would say a tip, if you will, is always do a pre-bill before you raise an invoice, because the pre-bill then, or preview, allows you to get a good sense of what these disbursements are, whether you actually accommodated all the disbursements in that billing cycle, right, before you actually commit to raising that invoice. Do that invoice, right? Ensure that you recover those expenses as and when they happen. If you can do so, that would be great, because there are no last-minute surprises. And that was pretty much, 4 or 5 steps. That's all you have to keep in mind. Record the disbursements as they happen. Decide whether you do it through trust or general. If it's through general, decide what component you raise as an invoice, what component remains to be your business expense. Raise a pre-bill invoice as and when it happens, and pay, again, obviously follow up for a payment, or do the necessary trust transfers from the trust to general immediately, so that you're making money is top of your mind. Meaningful and respectful, and what's rightfully yours, right? Then comes the question: this is one of the things that we had discussed. When we consider disbursements, do we consider paying this out of trust account? If I have to, if I do have a trust account, do I pay my disbursements out of the trust, or do I use it using my general account? Okay. And what we wanted to highlight are some examples of expenses that may be great candidates across both these different types of disbursements that you could use, right? For example, a court fee, or let's say an application fee. These are, billables. You can't change the court fee. It's $95 is what's mandated, and that's all there is, right? So if that's the case, then maybe there are great candidates to be transacted right out of your trust account, because there isn't much money or a markup to be made on that, because you can't. These are dollar signs that are not going to change. You basically are just transferring over the expense of what you paid for so that your client can pay for it. But the important aspect to keep in mind is when you do use your trust account to disperse or manage your disbursements, there's one lesser step in recovering that money, right? Because when paid from the trust account, you don't have to raise an invoice to recover that expense. So there's one less step when you use your trust account to manage disbursements. We have clients that, let's say, they have a legal fee of $565, which is $500 plus tax, right? And then they have, let's say, another $100, court fee that they anticipate for such a matter. Ask for a $665 retainer, and they clearly outline what that potentially entails. They transact the $100 for the application fee right off the trust account, right? Put in the legal fee of $500 plus tax, and then raise an invoice. The $100 is taken right off the trust account, and the $565 is recovered as a legal fee by raising that invoice. And then you just move money from trust to general. That truly safeguards you as a legal professional. You're not waiting, and there's no leap of faith, where you actually pay for it, have to send them an invoice, and sometimes you may not get paid for it, right? And in which case, then you may have to write off that expense as a business expense. So those are some of the positives and some of the flip sides if you were to use trust account, right? The flip side, obviously, is the fact that if you don't have a trust account, then none of this really matters. Then you're stuck with having to deal with a general account. But if you're starting off or if you're looking at trust account, these are some of the advantages that you could use. Bottom line, it just reduced the amount of bookkeeping by that extra one step. Okay? Now let's move on to, let's say, a classic example of using your general account. We have a lot of our clients, again, both sides of the story, right? So we have clients that collect, let's say, air miles or airplane points. They like to actually pay off using their own credit card, sometimes their business credit card that earns them those kinds of points. And then they're willing to pay for it from a general account, raise that invoice. They're willing to do that extra step of raising that invoice and waiting to make that payment. Okay. Regardless, recording the expense information, all the characteristics remain to be the same. Okay. So a great example of a general account payment would be, faxes, photocopies. As I said, if you're using third-party consulting companies, maybe you use to pay out of your general account. I think the quick answer is yes. I mean, you could. So the question is, can I transact off my trust account to pay for my disbursement? The answer is, as a trust disbursement, I mean, we know clients who write trust checks, right? So let's say an application fee, you basically write a trust check for that $95 right off your trust account towards that disbursements. And that is, again, what we can do is follow up with you specifically to this question and send you more insight about it for absolutely. But we definitely want to recognize that you are able to write that trust disbursement right off trust account. Okay. We looked at this real quick. So when to recover that disbursement, right? So we look at the different steps. So before raising that invoice, record all that information with the date, the appropriate characteristics about for who, the matter, the amount, the date, especially keeping in mind if there are any taxes involved, right? There are certain types of disbursements that incur taxes. There are certain that don't have taxes. For example, I believe court fee or application fee don't have taxes involved, whereas, other types of payments, consultancy fees, miscellaneous expenses, dinner expenses, all that could incur taxes. And the third component that you want to keep in mind with the general disbursement is whether you really want to use this opportunity to mark up, or maybe in the case of certain examples, mark down the actual expense itself, right? So some of our legal professional friends strike a deal with some of the software companies, such as DivorceMate or even uLaw or some other software companies, and then they spread that across different matters for different clients. So they may have purchased 5 licenses for $400, but may actually use $100 against 5 clients, right? A bit of a markup of about $100. And or some cases, if you're using third-party consulting companies, because it's a standard or something like that, you may actually mark down your actual expense. Okay. So those are things that you want to keep in mind from a general disbursement. Then you obviously raise that invoice, and depending on whether you have trust money and you're moving trust to general, or if you're not using trust at all, then you're just getting paid and accepting client payment directly into your general account. Okay. The question again, if you don't have just HST, obviously you don't. You keep that separate. Absolutely. Some of our clients don't, as part of their matter itself, they don't charge the HST. So there's 2 types of HST: the HST collected from your client and the HST paid. The HST paid is something that you still have to deal with as part of your business expenses or even disbursements. The HST collected is truly depending on your revenue stream and where you are at that. If you're not at that stage yet to collect HST, then you don't. And once you hit that threshold and cross that, you apply for the HST account and then start to charge your client HST. Okay? Okay. One of the feedback that we received from running this webinar the last time is to spend some more time on business expenses. So I'm going to try and run through some of these slides fairly quickly. I think this is a good snapshot of a slide that gives you some examples of the types of disbursements and which ones to use for trust and general. Again, these are just some best practices tips. As I mentioned earlier, any billable types, both trust and general, absolutely. Unit rate, most definitely only general. Likewise with mileage and travel time. Any recovery of expenses on actuals. So we spoke about a court or an application fee where it's actuals of $95 or $350, both trust and general. But if you're looking to make a profit margin, or maybe it's you're giving a discount on that, then it would have to be a general, be it a recovery expense or an outsourced consultancy. But if it's an outsourced consultancy, again on actuals, so the bottom line term here is if it's the actuals that you're just transferring over to a client, you can use trust account. But if it's going to be involving profit or other margins, then please do consider using the general account. Okay. All right, so kind of moving along. So we're going to get to this. I don't want to spend too much time showing you these slides, rather spend more time in a different way showing you these documents to begin with. But keep in mind that some of the documents that you are expected to generate as part of your audit report or part of your monthly reconciliation are the disbursement ledgers and journals, both for your trust account and your general account. In addition, you have your fee book with all the appropriate taxes captured. And as I said, instead of diving into the slide that shows you specific examples, let's walk through an example and we'll generate these documents one at a time. Okay. And quickly moving on to the business expenses. So before I jump into here, just a quick recap. As part of expenses, we've got two different types in general for a legal firm. You've got the recoverable disbursements, which are recoverable expenses on behalf of your client. And then you've got the business expenses. Within the disbursements itself, we looked at possible candidates of using trust account as well as your general account. Types of different disbursements that could be a candidate for either trust or general or both. Regardless, very important to keep in mind that you capture the different characteristics of that expense, especially for a disbursement, because it's very important that you recover that, because that's otherwise, a loss to you if you can recover that. And those are the client, the specific matter for which that disbursement occurred, the date, the amount. Does that include any taxes? How did you pay for it? Okay. So some of the top 6-7 characteristics of that real-life transaction. All right. So having looked at disbursements, let's briefly touch upon business office expenses, and then we'll jump into a live demo of how you can showcase all these different components. So we obviously understand that business or an office expense is the expense incurred to run your legal firm, right? Some of again, a quick snapshot of types of expenses that you should probably expect if you don't already know this. Anything to manage your office in terms of day-to-day, right? Rent. If you're renting an office space, imperative that you're paying that rent. Law society fees, one of the first fee or first expenses that we see most of our legal clients incur. Any membership fees that you may have. You may be associated with a certain membership, legal membership firm or an organization. Those could be potential candidates for office management fees. Cable fees, phone, cell phone, could be otherwise your office phone, advertisement, So you could have LinkedIn ads, Facebook ads. Those are all the advertisements and promotional office expenses that you would incur. Any entertainment and meals. Keep in mind, I mean, these are all the types of questions that your accountant, bookkeeper, or otherwise ask you, or your tax person will otherwise ask you when you're filing your taxes too, right? So these are all of your different types of office management expenses. We also looked at some additional expenses that you should keep in mind. Bank charges. We see that quite often, but sometimes banks may charge you a certain fee. Those are, you can always write it off as an office expense. Again, depending on your situation, whether you pay property maintenance or not, corporate taxes, and even borrowings. If you're going to be paying back those borrowings, those are expenses to be considered. And last but not the least, if you're a law firm or a legal firm that employs individuals, then the salary portion of those individuals are a very, very common expense as part of your business. Okay? How do you record them? No different from the disbursement, but obviously the difference is in this case it's not specific to a client or a matter, but everything else pretty much stays the same. When did it happen? Okay, what was the amount? In this case, instead of it being for a specific client and or matter, what happens within an office expense is it gets categorized within the type of office expense that's incurred. Okay, so is it an advertisement expense? Is this a meals and entertainment expense? So you can categorize these different business office expenses and then obviously transact them or record them within those tags or categories. Date, a description would always be great because when you're reconciling or if you're catching up with that after a couple of weeks, if your memory doesn't serve you well, a description goes a long way. Okay, I had this expense because it was a dinner expense with a marketing firm, right? Makes it really fairly simple. If you can categorize them, define those categories as part of setting up your office. Stationery or printing, rent, advertisement. Those are typical categories that you would find with any other business management system as well. How did you pay for it? Every time an office expense occurred. I guess one of the feedback that we have received is it's great to consider a business credit card. If you can afford that, get a business credit card. Make sure that you're paying off or using that one credit card so it's kind of easier to reconcile. If you can, have two business credit cards, one specifically for disbursements and one specific for office expenses, making reconciliation that much more simpler, right? Because you know that if you're using your TD Visa, then you're using it, let's say, for your office expense. If you're using your RBC Visa or maybe your, another MasterCard or whatever that card may be, then maybe you're using it for disbursements only. Another point to capture is who did you pay that expense to? Was it a Best Buy for a laptop, right? Who did the rent go to? Was it Minto Realty? How was it paid? We spoke about that. Sometimes it comes out of your general account as a check. Sometimes it could be out of your credit card. Sometimes you could actually just pay it out of your own pocket. A great example is a photocopy. Being at Staples, don't have your wallet or your purse, and you just used cash to pay for it. In which case, the business, your legal firm, owes that money back to you, right? Record them individually. These are some of the examples of how you could do it. It really comes down to your style. We have clients that do it as and when it happens. Have an expense, record it right then and there, or come back and record it at the office. There are then others who need help, who use bookkeepers, accountants to help them with it. Obviously, they drop it off in a shoebox, and then they hand over the shoebox to their accountant bookkeepers. And then there are clients who do it themselves through monthly bank imports. Okay? So there's many different ways that you can record these office expenses as well. And what are the associated documents that need to be managed and maintained on behalf of your office expenses? Definitely your expense book, as we spoke about earlier, your HST payable statement, your expense statement. It would be great if you can incorporate that within a profit and loss as well, and if you've had any borrowings in the borrowings report. And just the analytics is just another capability that we provide as a product, but something that you should expect out of legal accounting software today is that they provide you with that ease of access to information, ease of access to the process data that gives a definition or a meaning to what that data is supposed to mean, right? So what does it mean to say that I have $1,000 in expense? Is it more meaningful to say that of that $1,000 that I had in expense this month, 30% went towards rent, right? 20% went towards advertisement. Another 20% went towards meals. So breaking down and providing you a more meaningful set of information to make informed decisions is where the analytics world of legal accounting software is taking you next. So that's the real advent of technology. That's what you as legal professionals in this industry should be excited about and should look forward to. Okay. Again, we've spoken about this. There's many different ways in which you can record these. The fundamentals remain to be the same, that you do have to manage and maintain expenses on behalf of both your clients and on behalf of your office. Whether you do it manually or use software to use it, it's obviously left to your style, your comfort, and the way you've actually gone about your business. Some of the advantages of using software is the fact that you have the capability to record events as and when they happen. Right? You can even associate receipts and attach them along with those expenses, so you have them scanned and you don't have to worry about them again. The fact that you have to keep your bookkeeping records and your financial real-life records as close as possible, the whole bank import makes it that much more easier to manage these expenses, where you're able to import the entire month's expenses, or the entire month's statement, if you will, and then start to look at the different expenses holistically. Ease of use, compliance, as well as accountability, because then you're not scratching your head capturing HST every time. So the ease of use is obviously as you're inputting that data into that legal accounting software, the software does that work for you. It categorically cleanses which is the HST component, which is not, and makes it easier for you to report on all the documents that you're required to produce as part of your compliance. Okay? Okay. Again, for those who don't know who we are, we're a proud Canadian legal accounting and practice management software company. We're also a business office management company inbuilt as well. And if you have any further questions, please visit our website, give us a call, send us an email, and we're happy to help. I want to jump into the crux of today's presentation, which is, again, for CPD hours, I want to keep it fairly straightforward. And because of the feedback that we received from the last time, so we want to focus first on some of the business expenses. We do have a few webinars that we've been recorded where we exclusively focus on the disbursement. We're going to get into that as well, but let me first focus on the business expenses, okay, and how you can manage them, you can track them. So in uLaw, we have it under accounts. Another legal expense or legal accounting management that you may use may have it under a different section. So it really comes down to what kind of a product you use and the flavors they have. Okay. Within the context of uLaw as a legal accounting product, under our accounts, we obviously have on the right-hand side all of the Law Society documents. We have all of the reports, ledgers, documents as well. And on the left-hand side, we have the entire chart of accounts, which includes expense being one of the chart of accounts, right? So you've got the assets, liabilities, capital, revenue, and expense. And within the expense, you can create these different categories, as I mentioned, of these expenses. This is something that you could start at any time, whether you're just starting your office or something that you're just trying to rejuvenate how you manage your expenses. You can do it at any stage of your running your office, right? You've got specific consultancy expenses that you may have. So you may constantly use a third-party firm for certain types of tasks, right? So you may actually create them as third-party consultancy expenses as well. Rent and taxes, we spoke about that. Office expenses, right? This is a huge category of specific office expenses that are used to run the office on a day-to-day basis. You can manage this list. I'm using a playground account. Obviously, this is a huge list that is not so common within a firm. There's a fairly shorter list, but this being a playground account that I'm using, it's fairly long. But you can see it's pretty comprehensive that you can divvy it up by. Okay, so then you've got some other interesting examples such as depreciation. We spoke about interest and bank charges, right? So here are all the different categories that you can create. You can add to them as well. So if, let's say, for example, under your office expense, let's say you don't see an LSO fees, you can go create that. So you can say add new account as part of your expense account. Under your office expenses, you can say LSO 2018. Okay. And there's different styles to do this. You can just have one category called LSO and then just start to add all those expenses under that. Okay. Quick question is, how do we calculate the depreciation, and what are disallowed expenses? Again, disallowed expenses could be tip is a great disallowed expense. So let's say you're having a meal with the client. Maybe it's right. You're meant to disperse it to the client, but typically you don't add the tip because that's more of a personal thing. You don't add the tip and charge the client for that as well. So that's a great example of a disallowed expense. And we, again, the concept of depreciation is a much larger topic, so we're happy to take that offline. But for example, if you add furniture, that's a potential depreciating asset, or sometimes it can also be considered as an expense. So I'm not going to touch that right now, but we'll certainly be able to answer that question offline in a more detailed fashion for sure. So we just added that. So if you go back into your expense account, right, we just added under office expense right at the bottom, the LSO 2018 fees. Obviously, there are no records right now because there's no debits or credits or no inputs into this particular category, right, office expense. So now comes the concept of how do I enter office expenses as and when they happen. So we spoke about a few ways that we could do it depending on your style. So let's assume you've done it one at a time. You go into office expense, office expense, and you say that on the 22nd, you know what, for my office expense, and these are all the subcategories under that, right? I paid my 2018 fees, and you can put a description. If you've been provided with an invoice number, you can put that in too. The more, the better. Perfect. Great question. I think there's a question about what is this statement expense. We'll definitely get to it. It's just it's a more intuitive way of being able to add multiple expenses. So let's say on the 22nd, you had an LSO 2018 fees, right? And I'm just going to make this up. This is part of what the software does best. Any software should be able to manage this. Let's say you added $3,000 as the amount. It auto-populates the amount post-tax. Or if you put the amount post-tax, it creates the amount pre-tax. So it divvies up the tax that you paid for so that can be made part of your HST statement, right? Or if it's tax exempt, you can tell that as well. So we spoke about the different characteristics of expense keeping. So we looked at the date, very important. Because this is an office expense, there is no client matter. So instead, you have categories. What is that expense towards? And the better you can plan this, the better it is going to be when you measure it. So it's actually an office expense. It's under the LSO. You're giving it a brief description, the amount, very important. And then comes the final set of questions, which is, who did you pay this to? Law Society of Ontario. Then the next question, how did you pay for it? So you may have paid it as a check out of your general account, right? Sometimes for amounts as big as that, probably want to use a check. Or you may have used your Visa credit card, which is your corporate business card, and you can add multiple of those. But if you're just getting started and there's really no money in the business, that sometimes it may, there's always the starting point to everything, and you may have used your own money to pay for it. You can create subcategorized cash accounts as well, which is technically your own money that you're bringing into the business. You can say that you actually paid for it out of your owner's pocket, right? So for now, for the purpose of this demo, I'll just say I paid a check out of my general. That checkbox is that I can actually print a check that I can send to my printer for check number 3432. Now, the real question is, what is that? Well, let's say this is one particular expense that I've entered. But let's say I have actually another expense that I need to report, or maybe more, right? Then by having the Save an Expense checkbox created, it accepts this LSO fees, and it brings back automatically another screen where you can enter right away another expense. So you could say, I want to enter my rent expense. This is just a faster form rather than having to go back, click action, expense, office expense. That's all it is. It's just a faster, intuitive way for you to continue to add expenses as you go along. Okay? It could be a rent expense. This could be your that would be a huge rent. That would be $1,000 rent, and let's say you pay it to Minto, and maybe this you paid out of your owner's pocket. Okay. So if I leave that unchecked, then it just takes that one particular expense, and that's it. Okay. So this is a typical way of how a business owner, a legal professional, and a business owner in this case, starts to input office expenses. Now, as you continue to do that, behind the scenes, because of the advent of technology, you are able to now first capture the taxes that you've paid. Because sometimes, otherwise, if you have obviously need a way, a means by which you capture this as and when it happens, right? And instead of that, you're basically just going to capture it and save it and generate it, right? Expense, office expense. Then HST was document generation, tax, HST, and then you can choose based on whether you want it for the week, for a specific date range, or monthly, quarterly, yearly. Okay. So let's assume this is for the month of February, I would hope. There you go, from 1st to the 28th. Kind of tells you that you owe the government $3,000, but it's important to note that it's captured $345 of HST paid as part of your LSO fees, right? So the first column is the HST paid, or the second part is any HST received. And in the case where you don't receive HST, then within the matter you just don't add HST as part of your fees, except where there are some disbursements where you have to collect it, right? And here's the Feb rental fees. You paid $115 tax as part of that $1,000 rent. Okay. So this is one of the, I would say, the fastest advantages that you can right away see. We spoke about other ways in which you can start to report business expenses. We spoke about law firms or some of the larger legal firms that use their own bookkeepers, accountants, right? There's something called as a batch import. So basically, this is your typical shoebox, right? You put all of your receipts in. You know there's about 20 receipts for that month, and you can say this is basically, you can decide which particular account are you putting those expenses into, right? Is this my general account expenses, or is this my credit card expenses? You can choose whichever account, and basically take that shoebox, give it to your bookkeeper accountant, and they're used to a certain way of doing things. You know, they go in. They would just say, all right, it's an office expense, it's a meal, done, right? Submit. It's just a different, faster way of doing it. You put all of that one at a time, or you can do 10, 20 at a time, right? Put all the information in and just do it in a batch process instead of having to do it one after the other. And you can do this too. You don't have to, doesn't have to be a bookkeeper who's doing this for you. This could be something that you do yourself. And the last but not the least, which is what we find a more efficient way of doing things, is using our import bank statement, okay? Where you can basically say, I want to choose a file, download, whether you're using TD, just tell us which account or which bank that you're dealing with, okay? Choose the file. So technically, you would go to your TD account. You would download your February statement. It will give it to you in a CSV format. You upload that CSV format, tell us the bank. What we do is we skim through that entire Excel sheet or CSV file that you just uploaded, and we give you everything. So Michael's, that happened on the 2nd. You can basically say that's an office expense. It auto calculates it, picks it up right from that bank statement information that you provided, and you can go ahead and create that. Okay. Starbucks, probably an office expense. You can see uLaw, in a way, also finds to be a bit smart because it knows if it's Starbucks and it's kind of a meals, kind of appreciates that. And if you've got, let's say, Petro-Canada, for example, 6622, it knows that it's a gas expense. Today, uLaw imports as CSV file and not the PDF, but you are able to download, when you download it from your bank, directly as a CSV file. You do have the option of downloading it as different file formats, so what we would highly recommend is using the CSV format. Okay. So again, I wanted to highlight, yes, this particular is approved for 1 hour professional CPD credits. Absolutely correct. Now, having covered the business aspect to it, right? We looked at business office expenses. I want to get into, for those who have other bank statements, we're happy to work with you on that. Absolutely, we continue to add new banks as we move along. So now let's focus on the disbursement side of it, right? So which is very specific to a client, to a specific matter. So because that was the other side of the house, which is to deal with expenses as well, but they were recoverable in nature. Okay? So for that specific example, I would use a client. Let's go ahead and create that client real quick. So I'll say Mr. Derek Tyson, living at 891 King Street, Toronto, Ontario. And for Mr. Derek, let's go ahead and create a matter, because it's for that specific file that you have these disbursements for. And even if it's for the same client, and we've mentioned this before, even if it's for Derek, you may be dealing with a small claims matter, you may be dealing with an LATV matter, right? But the actual application fee, court fee for these matters differ based on the style of practice too. So it's not important that you capture it for a specific client. You actually have to capture the disbursement for a specific client for a type of matter for that client. Okay? So let's say this is a small claims matter, and we'll just say direct expense or slip and fall. Okay. So we looked at the example of using trust, and we looked at the example of using general. So let's quickly understand what those look like. Let's first get a retainer. Let's say you are dealing with trust money, so let's get a retainer in. So I'll say earlier this week, I received a retainer, let's say $500. We got a check, $554, and we'll get that into uLaw. Basically, let's assume that we've got a retainer from Mr. Derek for about $500. Okay? And we'll focus on just the disbursements aspect to it, right? So when you actually add a new disbursement, you can see the different options that you have. You can pay from trust, you can pay from general, it could be a consultancy expense, even a prepayment or a miscellaneous expense where I mentioned about, could be a dinner meeting, or could be another expense that way you can mark up or mark down, right? So let's first take the example of what it would mean if you were to use your trust account, and this was one of the questions, to actually pay for it. So let's say you have a trust check. So on the 20th, this is the actuals, right? For $100, this is a classic example where there's no tax involved, in court fee. You can basically say, this is a check. I wrote a check for $565. I wrote this to, and the description was application fee. I'm just, making this up. Obviously, it could be a court fee too, and this could be to the Ministry of Finance, let's say. It comes right off your trust account, right? That $100, and you can then print that check. And you would notice that $100 would come off the trust receipt. The projected balance and the trust receipt would now be the same. Okay? Because that's money that's gone right off your trust account. You can print this, get that PDF printed, and then you'll be good to go with that trust check. So here was an example where I paid a $100 application fee right off my trust account. Okay? Well, let's take another example of a disbursement paid from general. In this case, let me take a unit rate, for example. I would say photocopies. You can see it automatically changes to a unit rate. Then it really comes down to how many photocopies have I done, how much am I charging per photocopy. Okay, this is totally left to your discretion, right? This is basically what you have in your retainer letter along with your client. You determine what the different expenses are. You decide whether tax exempt, you're going to include tax in it, because these are the expenses that you incurred or you plan to incur for that particular matter. So let's say for about 100 photocopies and you're charging, almost $1 a copy, which is really not the case many times, but just for the purpose of this demo. And because we are also, uLaw is also a business accounting software, right? Top part, you would disperse it to the client. This is very specific to the client of the matter. The bottom part is you telling, especially because it's a general account, how did you pay for it? Well, let's say your photocopy machine died on that day, right? So you had to run to Walmart to get it photocopied. And let's say you paid Walmart $200. And I'm just making this up. And this could be other better numbers. We included paying Walmart this $26 tax, 13%, right? And maybe you paid cash. And there are other examples too. Maybe there was someone else in your firm that paid for it that you got to pay them back. Or you could use the example of, let's say, an RBC Visa business credit card. And you could say I paid it to Walmart, Canada. Credit card, and the bank would have given you a transaction number. So here's where you're charging the top part, photocopies, $100, right? Consider this maybe like a markdown, but you almost incurred a very bad expense, almost $100 addition by going to Walmart because your photocopy died on you that day. Okay, you could have technically charged $2, but you're a good Samaritan, you're a great legal person, look after your client, or maybe that's what you signed up for, that's what you're going to disperse. So what's going to happen, one end it's going to disperse your client the $100 plus tax, and the other end it's also going to transact your office expense at $200.26, right? So one end you generate your expense book for the month, and on the other hand, if you go ahead and raise that invoice, you're going to generate the disbursements, expenses, or journals and ledgers for your client. Okay, those are two different expenses, but both need to be recorded in some form of bookkeeping. So if you look at your expense report, obviously breaks it down by category. It tells you the different categories in which you've had expenses for that month. It tells you rent and taxes was that much, client expenses, with the gas expenses. You look at that 2000 LSO, 2008 in fees, right? Let's look at another type of disbursement we spoke about, which is, a consultancy expense. I would say stand-in, where you're charging the client, again, $100 or $200 fee plus tax. You're being charged by that third-party consultancy fee, $150 only. So this is basically a markup. So you're charging your client $50 more than what you paid for that specific stand-in or appearance in court, right? And this you're paying, and this, if this was an expense, and this is the great concept, if this was a dinner meeting where you're charging your client $100, it's because it's the same $100 here, but then you paid an additional $10 of tip, then that $10 does not get charged to your client. That becomes another office expense for you, right? So that is an example of a disallowed expense. But I'll go back to my original example because it kind of illustrates the markup. So here's a $200 fee. I'm going to charge. I got charged $150. There's no disallowed, and I'm paying making consultants that $150 plus tax. I'll say I paid it on my general account, wrote them a check. Okay. So the top part again is the disbursement of a $200, and the bottom part is your business expense. Okay, both captured in a single panel. And let's just put one last initial client interview for the flat rate, $61. And this was the question around HST, that if you don't want to charge the HST, right, you can go ahead and make your tax rate as 0 so that you don't charge HST on your fee. We spoke about the importance of the invoice. You can go ahead, raise that pre-bill, be completely aware of the situation. Before you raise that invoice, it's great to generate that pre-bill. Again, it tells you here's your $61, but more importantly, look at all the disbursements. Interestingly enough, it does not. These are all the general disbursements. Sorry. So you've got your photocopy, 100. Charge them $1 per unit plus tax. You had the stand-in where you charged a markup fee of $200 plus tax. Interestingly enough, if you look at that other trust disbursement, it's mentioned under your set of all of your trust transactions. You got a $500 retainer, and you actually wrote the application fee $100 trust check that came right off trust, reducing the trust amount to $400, and that's the addition of the $339 and the $61 that made it a 0 balance. Okay. So once you're happy with that pre-bill, you can go back and generate that invoice. You may want to mark this as paid because there's money, they've already paid for it. Use any of the different themes that we have to generate the invoice. And send the client that invoice. So once you raise that invoice, it's very important to note that the eligible trust transfer is now $500, though you got a $500 retainer. And this is where, a software like uLaw keeps you very compliant. Though it was a $500 retainer, the fact that $100 came out of your trust as that trust disbursement reduced the trust receipt to $400, and then everything else that you transacted came out of that $400, right? Actually, $400 came out of $400. That's why there's a zero balance. And what the invoice shows, obviously, is your legal fee, if there was one. It shows the photocopy. It shows the consultancy or stand-in fees of $200 for sure, because it's a disbursement that you're charging them. And it also shows them the retainer as well as the trust check the trust disbursement of $100 for that application fee, and tells them that that's your amount due. Okay? And all you have to do is do the trust transfer of the eligible pending trust transfer. Now this is where it gets interesting. You keep software like uLaw open. You keep your TD or RBC or CIBC Bank, open as well. You basically choose, and it's the eligible amount of $400 that you move from your trust to your general account. And specifically in Ontario, if you do an electronic fund transfer, so this is where you pause, do the actual $400 transfer from trust to general, put that amount in, and hit transfer. And in Ontario, you're required to fill out what they call a Form 9A. Okay? A Form 9A is something that you have to generate every time that you move money from a trust account into a general account. You would necessarily have to sign this 3 times. So you would actually file it for every time you do that. Now, having done that, right, we looked at how the expense book reflects all of the expenses for your office expenses, right? And you can generate your profit and loss statement, your fee book, your expense book. So the expense book obviously generates a detailed record keeping of all the office expenses. When you look at your legal side of the disbursements, this is where you have your general disbursement payment, your trust, any trust payments. So let's just generate one for this particular month, and you get a good appreciation for what that looks like. Okay? So first, let me open up the expense book, which captures both specific client, description. So if I can actually highlight for Mr. Derek Tyson, as you noticed, the photocopy that we had for that specific matter was that for $200. Okay? And here's a great example of a disbursement journal. And the important aspect of that is that it captures the date, the method. That's a very important column that they ask for. Who was it paid to? What was the description? And depending on the jurisdiction, the different taxes that are collected. And if I were to go further down, it talks about, okay, one, here's the Law Society of Ontario, the fees that I paid, the consultancy for the stand-in for Derek Tyson matter of $150 that they paid. In fact, I think this is the expense book, sorry. You've got the Walmart Canada photocopies that you paid for, and I think we imported the Petro-Canada fee of $65 from that Excel sheet that we had, right? Likewise, you can generate reports, for each of that. So client's trust, very important, because the trust ledger is where it would reflect. And you can do it for the month. You can do it even specifically for a client. Okay? If you wanted to do it specifically for Derek Tyson, it would clearly showcase to you how the $100 came off your trust as part of. You received that $500 receipt, right, as a retainer. You had a $100 disbursement come right off your trust as application fee, and the remaining $400 was what was taken through those invoices that you raised, leaving you with a zero ledger. Okay? So I know I'm really past my due time, so I'm going to open the floor for any questions that you may have, because I like to take a pause here because I know I've gone real past the time. But I hope this was, again, an informational session. The bottom line being that there are expenses that you incur as a legal office, both on behalf of your client as well as on behalf of running your business. And the key to keep in mind is how you manage it, have a plan of action to do so, and the differences between these expenses as we looked at, right? How you would recover these expenses through your invoice. We looked at the differences between a business expense as well as a client expense, where it's more specific to a client and matter, whereas a business expense is then categorized. The quick question is, can we speak with someone regarding these webinars and others? Most definitely yes. Please do email support@uLawPractice.com, and we'll be more than happy to either set up a time to speak with you or send you information via email. This particular webinar will be recorded and be available, and we'll send you a link to it as well. That way, we would appreciate if you could send us a quick email to support@uLawPractice.com, just marking your attendance as well. Oh, thank you very much.